What's up, YouTube? Time for another recap. Very solid, very clean day off of our Fibonacci price action predictions. Let's get right into it. So this morning, we had a 50% weekly Fibonacci tag again, right? This was a prior target for last week's short down to 438.68. We looked for a early morning bounce on that. Okay, so trade number one for me, what did we end up at? $1,341.50 just about today for the trade day. Trade number one was a chase long out of the gate. So as long as it held the 50 right here, we had an opportunity to squeeze back up, and we called pre-market open as our target. Now, that's almost dead center in the prior gap that was filled. You see the shadow zone right here, which is a prior filled gap, but that pre-market open looking really good. Trade number one was just over the 5-minute 200. Now, this is an important level because we used this twice. Squeeze out here, and let's get into why I took this first trade. First trade, obviously the 50 Fibonacci weekly support, yesterday's low support. We were going to have a little bit of a pop back up here this Monday morning. Oscillation helped us with that here as this morning's early pre-market dip oscillated back. We came into the top oscillation channels, right? So top trend, look at our TTM, bigger buy waves, smaller sell waves, and trending in the top of the RSI channels. All oscillation working together, so why not take the squeeze long off of a very pinnacle level of the 50 weekly, okay? So I did a little bit of a chase level here over the 200 SMA 5-minute. So it broke out the 78.60 fib, and most importantly, that 2618, which is a very big over-under for us right now, because that was our short target last week coming into this as well. And lower. So when we're getting into the hidden Fibonacci system that I have drawn out here, we have a handful of things to take here, actually. A ton of different trades to take here off that. But the first one being the 50 fib. Let me readjust this right here. There we go. Being the 50 fib support and all the oscillation indicators working for a little bit of a pop out of the gate. So out of the 5-minute 200, I took a long breakout over the 78.60 fib, all the way, of course, to the 38.20. Why is that? Well, our golden pocket is always at the 50 fib above or below, right? And obviously, if you have your Fibonacci pointed in the correct direction, you would have this pointed to the downside, which puts your 38.20 golden pocket above the 50 because we are still looking for that short. And that's what gave you the entry, right? So we have a hidden Fibonacci system here. I can't really explain it for you guys, but my team members know how to draw these of the top pocket, and this is the short zone, okay? So that guy right there for rejection of 38.20 or standard deviation +1. I was fine with that up there too. If it even shorted or popped up there, I would have shorted. I took a secondary short play now on the rollover as my second trade. Trade number one was right here, all the way back up over the 2, and I took a reversal short right into that cover. So I longed here on the break over the 78.60 and reverse short the second it hit its first tag on the 38.20 and took another just about 3 points off this one, I think it was. So we top ticked this. We had 3 points. Yeah, we missed the entire candle white point, but we had 3 points from the top side here, and over the 200 down here, we had 5. So I was up 8 points here. And then our third trade was a short continuation, and this is what hits the rest of our calls for the day here. Now, this broke down under the pre-market open. And my thesis was if it was over the pre-market open, we could still have a little bit of a run, pop back up to standard deviation +1 5-minute at worst case scenario, or we're going to start setting up for that reversal. And we had a big crack right here, right? So I got short right when it was coming through here, this pre-market open and VWAP. So we just started cracking it, and very early, and my target was the 200 again, SMA 5-minute. And I'll tell you why. Because that first breakout of the 200 SMA 5-minute, it needed a back test of confirmation, right, before we could continue. And my elite students know why this was not a particular long setup that was going to continue because of the moving averages systems. Another thing I'm not going to show on YouTube, but our elite system on how the moving averages set up was giving us a very big downside incantation. So a pop to a little bit of a roll is what we were leaning towards. Now, our hidden Fibonacci system puts us down at the target of 431 far extension. And when I left, I gave my team a target of 432, and we'll go over why that was. So I got out of here at about 9:30. I only traded the first open hour and a half. There isn't much I can't do in that first hour that I can't come back for in power hour. So we always try to get our day going by the end of that. But right here, this dump, I called 432 for the day short. Okay, so any kind of opportunity you guys were holding short or shorting into the lower high, lower low systems that we're putting in place, you would have came down to 432 as your short target for the day. So if you look at 432 and some pennies, where's that? Right here, okay? Where's that? Pre-market low, great. So pre-market low, 432. And where did that other confirmation of this level come from? Well, we were looking at a few different things here, and we're going to cover, what can I cover? We'll cover the 1 minute first. So the 5 minute for continuation scale, we'll do 5 minute first, I guess, because we're already here. Broke the 50 RSI, right? So oscillation channel changed to the bottom side. We were no longer the top side of the oscillation because all the longs in pre-market off that 50 were showing us MACD, TTM waves higher than the seller waves, right? So look at our playlist on indicators on how to use these oscillation stacks if you are confused there. RSI, top channel again. So all oscillation from pre-market's 50 constituted this first long, and then it broke. You can see that 50, back tested 50, and now became bottom channel oriented. So we know all pops can be shorted on the way down. So short, short, exit, exit, short, exit, right? So all of these are very easy to read in MAC and RSI because we are in the bottom channel. Now you see the oscillation start to kick back over to the other side of things in the MAC, where the MAC created a higher low, TTM created a small sell wave for a pressure push, and the RSI also created a higher low in that metric of the system. So did the price action. So it squeezed back up at the end of the day. Again, that's just some shorts getting out. That's just some technical indicators resetting, doing their thing. On the intraday squeezes and pops and drops. So no big deal there. Ultimately, we did hit our 432. Now, why did 432 come up, right? 432 came up because of my anchors, okay? So we have an anchor VWAP system here. We'll scooch this over here. And this morning, I gave us this little extension line. These recalculate as we go. And the biggest takeaway here was this anchor was not tagged during live hours. You know, this is after hours and this is pre on TradingView, right? So during live trading hours here, we never got a tag of that anchor VWAP. So this pressed back up and we said, if it goes a little bit higher, I gave it the target of 434.80, maybe 435 at best for top of the day because of this anchor continuation. So this anchor came through, perfect resistance. And now this was the big key to the short. There was no tag live of data. So these algorithms, they love to tag, right? They have to tag, they have to magnet. It's another situation back here 2 trade days ago where we had a no tag of this upper band, and all of these little jolt backs down got bought back up until it spiked up and again grabbed that targeted magnet. Same thing that happened today where we had popped up, left a gap here, no tag, never tagged back tag from where this anchor is, and I'm not going to show it because these are paid for systems a lot of the time. So you can check our other YouTuber, Connor's at Boiler Room Trading, for some more extensive anchors. I use them a little differently, but I think they're very, very fun to use and very reputable for this alone. So this magnet did not tag. That's another reason I got 432, because this big pop out was not looking like a long because of our moving average system, because of deviations, oscillation, came down, finally tagged. Okay, short's done, 432. Anything else past that is bonus, right? So if you held a little bit past that or a small position size, our Fibonacci gives us down to 430, we'll call it 431. We got 0.94. And then the further continuation to the 3820, which we're still looking for 430 and below. Now, mind you, we were short way back here, shorting all these pops. And I chose NVDA. We'll go over that next on why this was. Now, I'll give you one last little indicator before we do the old NVIDIA, and that was the volatility index. And I'm not going to tell you exactly why the open was so healthily respected, as we knew it was going to come back down. But this early morning snap down to yesterday's highs to fill this gap, right, was definitely a strong magnet. But it had a very secret gap up here. If you know what I'm talking about, you know. If not, you don't. But the momentum back up here carrying the volatility index, we knew that the volatility index was going to have a sharp move up after its sell down. And I said yesterday's highs would be your first watch. Obviously, that is filling the gap. So here's yesterday's highs, hit, that is now filled, okay? And now we have a secret gap up here that needs to be dealt with. That snapped all the way back up and then some, right? And now carrying anything over $14.19, the drop will continue per the volatility index. Let's talk about NVIDIA. If you were here for NVIDIA last week, I was building some put positions back here into another Fibonacci golden pocket. Let's look to our left. Where's the 3820? Right here. 38.20. That's the golden pocket, right? So I was grabbing puts as we went through. Ended up with 400 puts, a little over a month out. And our last ad was this one here. We're up like 13-15%, something like that. Last trade day at the end of the day, barely up about $50 per contract. It's up like $200. I grabbed 4 of them. The end of the day today, being up over 70% at this bottom, we were up 2,500 on the option. So not including the 13.75 we made, or 13.41.48 that we made today. On futures trading, we locked in just under 2,700 on some puts as well and let one go. So we're going to see where that goes. Now, my NVIDIA target, as I told my team, was the Fibonacci extension 2618, 416, AT5, and then 400 and near gap. So target 1, target 2. Here's the 400 psychological number, right? Boom, we hit 401 bottom of day, and the next fill is obviously gap fill 396. So we're going to hold some small position size into that, as we have already pocketed over $2,000 on these puts that we had called last week. So what's next, right? Well, we got Powell again this week, so I'm not going to get too far into technical analysis until Powell speaks again. But if the leak continues, we will still continue our further Fibonacci hidden system down. So anything, we'll say under 432.75 for a confirmational hold, we're going to end up near 430, and we're going to slowly walk ourselves back down there. Now, after 430, not quite sure, because we got some very large gaps close to mid 420s. And our hidden Fibonacci from here is even saying that we could end up back there. But I did give a target, or 2 different targets, from a daily Fibonacci gap up that we had used a couple Fridays ago, and that was the 1618 from that. So I'm very confident in this 430, because this 430 lines up with our next 38.20. So where the market's going is 430, okay? 429.88, 430 and 3 cents, 429.68. These bars right here, that's the next stop for the market. Now, mind you, moving averages will catch back up. Stuff will slowly come into play, and we might actually open up down there and cause a little bit of a pop and continue. But on my next 2 targets, okay, 2 targets, going to be 430, and then the 100 fib, 428. So those are our next 2 levels down if the pop to lower continues, but that's going to be Powell dependent. So unfortunately, we got to wait for that data. So tune in for the next.